Hey everybody, this is Adrian here, coming back at you once again with yet another report on what's going on in the world, in the finance world, with assets, with money, everything that pertains to property and basically, hard real assets in this world. So look, I want to get into one of the most profound things that impacts any real estate market or any market whatsoever, whether it's cryptocurrencies, even gold. As we've seen in more recent years, where gold is impacted positively by money printing, where it shouldn't be. All right, so anyway, this is the key point. I just want to dive right into you with this one. And by the way, like if you're sitting back and you're really unaware of all the things I'll talk about within this video, you might be a little shocked. Like you might be a little bit confused as to what really is causing the driving of a market, whether it's a real estate market, for example. A lot of the time people think, well, the economy's got to be really strong. You've got to have, you've got to be looking at, the past 3 months of data from CoreLogic data in Australia to see what the people are doing. And although these are all things you need to sort of have in the back of your mind, I mean, look, when it comes to an economy, you've got to remember during, I don't know if I should say that word, but anyway, it's too late. I've already said it. Let's just call it Bologna virus. It rhymes with Bologna virus. That big thing that happened in 2020 to 2021. I don't want to say the word because it might get censored, but we're talking about, it rhymes with Bologna and it's virus, so Bologna virus. When the governments decided to make it illegal to go to work, remember that? And they just paid everybody to do nothing and stay home. Well, in that time, we had a substantial amount of money being just sort of invented out of nowhere and pushed into the system, which increased the property market's price. So you had an economy that was flatlined and the property market took off, cryptocurrencies took off, prices of gold took off even. So all of these things together start moving with more money in the system. It's a supply and demand issue. That's a big deal, right? So this is just money supply. This is just money supply hitting the thing that money's denominated in, which is all of the assets. But I want to talk about this today and what to expect, because I've been saying this for a long time with regard to inflation. I mean, I've been saying a lot of things and people get confused with regard to how this affects property. But you see, to look at it, how I view things is macro and then ultra micro market stuff. So macro market is the key source of where money comes from. The key source of where money comes from is the central banks. So the central banks essentially run the policy on money. So monetary policy run by central banks. They are wholly and completely responsible for monetary policy. Okay, that's not an invented thing. That's definition wise. Okay, so how this impacts my perspective on it is I've got to look at what's going on in the macro side of this equation. And Donald Trump happens to be the president of the United States, which the president of the United States happens to be, the president of the world. Let's just, cut to the chase here. If the president of the United States wants to do something in some random third world country, they're going to go do it. And they've proven this over and over and over. They just do whatever they want. When it comes to monetary policy and what I'm about to show you, you may have seen this already, but what I'm about to sort of just, really want to explain is the impact that this will have on the rest of the world. Okay, now this is here, Trump. Let's shove that aside a little bit. So this is Trump here talking about how he's going to demand the lower interest rates from the Fed. All right, the reason he has to demand this, right, the reason he can't just do it himself is because essentially a president doesn't wield the power to control the central bank. You may have heard Alan Greenspan in the past, I think it was around 2002, say, look, the president doesn't have any right or control or any authority over a central bank. Central bank does whatever they are going to do. And when it comes to monetary policy, yes, that's true. That's a fact of the matter, okay? So this whole idea about, demanding lower rates from the Fed, if you ask me this headline, I knew this headline was coming. I would say the next headline that's going to come is that the Fed sort of, thumb their nose and say, well, we're too smart and sophisticated. We're not going to do that. We're going to keep the rates where they are, or whatever they're going to say. And this will be just a few days from now. We'll know the answer to this. But what this really means to me is that we're going to see like a little play fight. This is going to be a little play fight where you find if you remember back, I think it was like early 2021, like March 2021, where Facebook had like this little pretend fight with the Australian government, like, we're not paying you, we're banning all of your, legacy media outlets, they can't have Facebook accounts. And then eventually it just happened that they ended up just saying, okay, we'll fund your legacy media. So we'll just pay Channel 7, Channel 9, Channel 10, we'll just pay them to have the luxury of having them on our side. Now, it was not the case ever that they wanted to have, this is my analysis of this and my opinion, they did not want to have, their ultimate goal was to have the legacy media paid for by Facebook. That's it. That was the ultimate goal. But they created a little, muck around story and little pretend games and stuff like that. The same thing's going to happen here. You're going to see the Federal Reserve come out and say, we're not going to do it. And then Trump's going to call them idiots like he did last time. I think it was 2018. He called them boneheads. And he actually advocated for negative rates, 0 rates, negative rates. The economy is literally a zombie. All right. I think everybody generally should know that. The economy is generally zombified. And without low interest rates, which is the price of money, cheap money, free money, basically, you're not going to have an economy. You're not going to have a stock market. And the stock market is, again, a lot of people confuse this. I don't know why, but a lot of people confuse the stock market's performance with the economy. Again, go back to COVID, it's not related. The stock market went up, the economy was flatlined. So it's irrelevant in respect to that. But the reason I bring it up to you is because Donald Trump, okay, this is how it's going to impact your need to invest, will force lower rates. The Federal Reserve will come out and say, well, we don't want to do it, and they're going to do it in the end anyway, okay? You're going to see low rates, and I would say debts and deficits to the extent that we've never seen before. Like never in history have we seen this kind of money printing, and we've just gone through that 2021 period of monetary expansion, 2020 to 2021, whatever, however long it went on for. It was multiple trillions of dollars worldwide. So the point that I'm making here is this particular article, and there's other bits and pieces, like the ECB is going to lower rates. That's going to happen. I don't find that to be so substantial. It's just realistically what Donald Trump says is going to be the most impactful thing. This is going to be the big thing that causes investors, just people of the world, to need to become investors for survival. So, essentially, when I say that the market we're coming into, although you may see it is a good buying opportunity right now because it is suppressed, because there's a lot of uncertainty. Normal human beings see that there's uncertainty and they're like, I don't know, I don't think I'll pull the trigger right now, which is what makes a low in a market. The irrational exuberance is what makes the highs in a market. What we're going to have is necessity to do something about the amount of money printing that's going on around you. Money will always seek yield. It will always find assets. And that's why it's going to be absolutely abundantly important for people to invest into real estate, gold and silver will not go up the same way real estate and cryptocurrencies will go up right now, because gold usually goes against the inflation that comes out because it doesn't, give you a return. It is basically going to be sort of the place that money would go to last before the entire system collapsed. So I still think it's on sale. Personally, do whatever you want with cryptocurrencies and gold. I don't sell either of those two things, but we do work in the capacity of buying real estate, which has a return. It also has a use case. It has a tremendous use case to support having a roof over somebody's head. I'm indoors now. Everybody has real estate around them. It's a necessity to have shelter. So having said that, what I want you to do, if you are keen to learn a bit more about what's going on in the micro level of real estate investment, so I'm talking from the extent of actually buying something, where to buy, what to buy, micro levels of economics down to the actual side of the street you buy in a particular suburb, the type of house, the internals of the property, can you turn that back room into 2 different bedrooms, things like that. So we really get, granular on the actual investment side, but I'm driven by what I see happening in the macro. We're talking what the president of the world has to say here, what Donald Trump is actually, doing and has to say. So it's extremely important that you pay attention to that. It's all I focus on. And when we're purchasing real estate, I focus, hard on the actual microeconomics right around that property. There's got to be infrastructure. There's got to be reasons people go on there. We do heavy research when it comes to that, massive due diligence. And another thing that's really tricky, I think I might get into this in the next video because this is going on kind of long, but the tricky part right now is navigating what the Australian government has done to the construction industry. So on one hand, I've mentioned here, you've got massive money printing going on. It's already happening now, by the way. A lot of people don't know this. I'll speak on this more as we go on, but most people don't know the money printing is still going on constantly, to huge levels per month. I've mentioned it previously, but I'll get into it more. That aside, you've got immigration in this country. Huge amount, was it 1.5 million so far that have come in? Now, basically, these people have been pretty ineffective in regard to impacting the country in any way when it comes to construction. So they're not working in construction. If you had 1.5 million construction workers, it would be a very good thing for the country. But they're not. They've just come in, they want a job, they want to do something else, that's fine. They want to obviously need to rent a property. There's a necessity behind real estate, which is one of the reasons we really believe in real estate as an investment vehicle. But that puts pressure on rents and purchases right now. Okay, and you will find that a lot of the people that are coming into this country, they're doing this thing called syndicate purchasing, where they're banding together with all of their bits and pieces, all of their money, and they're buying an investment property. So they'll be creating a fund amongst themselves to buy an investment property. But again, I'll talk about these things later. I know of these particular cases. And of course, you have the housing crisis issue in this country. Huge issue when it comes to the housing crisis. And like I said, the government's doing nothing, but it looks like they're doing things deliberately. Like if you're just looking for an outward perspective, you could say they're purposefully causing a housing crisis. That's what it looks like. So what it means with this demand for lower rates, which is not something that Trump has just been brutal with everything he's been executing on lately. It will happen. Federal Reserve does want to lower rates. They do need to lower rates. They just need someone to blame. It's going to be Donald Trump. When it comes to letting more people into the country, I wouldn't be surprised if, there'll be a whole bunch more coming in this year. I don't think that that's going to slow down at all. It's going to put more pressure on prices and rents. So property is being shoveled into the position of an exceptionally good investment. Okay, an exceptionally good investment. So look, I'm going to leave it there, guys. I'll report more, obviously, on more information that comes out about this with regard to the Federal Reserve. I think it probably will take a month and there'll be a bit of back and forth going on. I'll share the next headlines with you. And with regard to, like I said, if you want to have a one-on-one meeting with us, we'll just basically, go through your particular circumstances, get you up to speed with everything, talk about the specifics when it comes to the particular property that you might want to buy. And then we can sort of, take it from there. But I'll just leave you guys here. Thanks so much for watching, and we'll chat to you again very soon.